Hello and welcome to this month's market update. I'm joined by KC Lowe, a senior member of our capital markets and asset allocation team. KC, welcome.
Bill?
It continues to be a pretty incredible time for the economy and markets. I guess we've come to that magical time of the year where we draw a line of the end of a financial year and look ahead at another. Given there's been so much that's happened over the last year, I thought it'd be good to go and sort of take stock of how that's all ended up. Maybe just start with what's happened in the economy. Can you give us sort of an update of just how it's all unfolded?
Yeah, so as you say, it has been an incredible year. It's really been a story of two halves. So, the first half of the financial year, if people can still remember, we've had this ongoing trade tension between the US and China. That was the big theme at that point in time. And during the first half of the financial year, global growth was also growing quite softly as a result of the trade tension. But then, as we know, in January, US and China signed the phase one trade deal, which helped a lot. But then on came COVID-19, which is really the dominating theme for the second half of the financial year. With the pandemic came also unprecedented level of fiscal and monetary support that came to support the economy. So it's been a wild ride for the financial year.
It sure has been, and yeah, we've talked about these issues a lot internally, and so when you look at turning from the economy to financial markets, you said we had the China trade tensions, and that was weighing on markets, and then we've had COVID, and more recently quite a big bounce back. So when you look back at that whole financial year, how has it all washed out across asset classes?
So despite all that's happened, surprisingly, if you look at developed market shares and in Aussie dollar terms, it's actually finished the financial year in the positive. So it's up about 5% over the 12 months. Emerging markets was slightly negative at about 1 to 2%, and then Australian share markets been negative, underperforming the others at about -8%. But in all, it's not such a bad outcome when you think that, considering we're in a pandemic right now. The Reserve Bank at this month's meeting did talk about how prices for financial assets have increased substantially despite all this uncertainty that's going on for the economic outlook. So that's something to keep watch of. In other asset classes, you look at bonds, so Australian and global bond markets, they've also finished the year in positive, providing that downside protection for portfolios. They finished about 4 to 5% in the positive. And then if you look at currencies, the Australian dollar finished the financial year at about 69 cents, so which is about 2% below where it was at the start of the financial year.
Wow, and you mentioned some of the comments the Reserve Bank's been making at its last meeting. And, if we go from looking at the last financial year to what's really just happening now, and and how things are evolving, as we speak, I guess what are the things you're looking at or thinking about, and what's happening now?
So on COVID-19, the situation is still precarious. Cases in emerging markets continue to increase at an alarming rate, while in developed market overall cases do look to be more under control now. But having said that, there are some regions where cases are increasing again. So US in particular is one. More than 70% of US states by population are either pausing their reopening or re-entering lockdown now. And then, of course, in Australia, Melbourne's reimposed stage 3 lockdown. So on the COVID front, things are still changing rapidly. On the policy side of things, we see policymakers continue to provide a lot of support. In the US, the Federal Reserve announced in mid-June that they'll start to buy corporate bonds directly from the market now as well to support businesses in terms of providing them with credit. And then in Australia, the federal government's announced looking at further income support policies, especially post-September when the initial rounds of support runs out. And then more recently, there's been an announcement by APRA and the banks about providing extension, a 4-month extension to mortgage holders in terms of deferring their repayments on top of the 6 months already provided. So there's been quite a number of support policies that's continuing to be announced.
Yeah, great. It's like certainly is a situation that keeps evolving very rapidly. We a lot to still for us to work through in the months ahead. Thanks very much for your time, and thanks very much for joining us in this month's Market Video.